Hey, welcome back. While markets react to over 3.5 billion in crypto liquidations across Bitcoin, Ethereum, and Solana, institutional momentum continues to build quietly just beneath the surface. UBS just executed the first on-chain fund redemption using Chainlink, and at the same time, Maybank and BNP Paribas launched a fully tokenized money market fund advancing blockchain adoption for real-world assets. So referring to this first article, UBS and Chainlink just executed the first ever on-chain tokenized fund redemption in this $100 trillion global fund management market. Now, this is, again, very significant because this is non-hype, non-FOMO or experimental. This is real TradeFi plumbing going blockchain native. So UBS used Chainlink's cross-chain interoperability protocol, the denominated CCIP, giving fund managers a compliant way to settle across blockchains. Institutional validation of Chainlink as the data bridge of choice for RWAs, solidifying its role as the SWIFT of tokenization. It adds enormous credibility to blockchain-based settlement for funds, not just stablecoins. So again, I've talked an awful lot about Chainlink, in fairness, in the last 2 months, where I've been following with a close eye on how Chainlink has really started to creep itself within TradeFi and mainstream, particularly working with financial sector players, institutions, in order to bring in real-life physical analog data onto the blockchains in any RWA coin project. So that is ultimately what the value proposition behind Chainlink is all about, is to be that data bridge of choice for these RWA coin projects. So again, we're going to be seeing an awful lot more announcements of this type around how Chainlink can help bring in specific types of data for these types of coin projects that may serve a particular market segment. But it's fair to say that is now becoming clearly that transversal data layer within the blockchain space. So again, this is very good news, and this is something that we should investigate because it has huge potential and growth in the future. Right, this next article talks about Maybank, which is one of Southeast Asia's largest banks, just launched a tokenized on-chain money market fund, and BNP Paribas. Now, this is important because it's Asia's first fully on-chain fund from a regulated banking group, which is compliant with the Singapore's MAS framework. Now, the MAS is like the Singaporean financial regulator. So anything that helps blockchain to creep itself within the realm of compliance regimes in different parts of the world, well, this should be taken as a bullish sentiment, right? It actually enables, as blockchain does, that 24/7 real-time fund subscriptions and redemptions, breaking the T+2 TradeFi delay barrier. Now, this T+2 delay is about the actual lead time to settle those transactions on SWIFT and TradeFi, usually several days, as yet another benefit of blockchain over TradeFi or SWIFT is that instantaneous transaction settlement on the blockchain. That is the key advantage amongst many others that it provides, right? So it demonstrates regional leadership now in tokenized yield products, paving the way for sovereign bond and repo tokenization. It reinforces Singapore's dominance as the regulatory hub for RWA finance. So again, we're going to be seeing a lot more traction on blockchain technology, much more traction on top relevant real asset coin projects that we're starting to see come into the masses, into the mainstream, and certainly to TradeFi, right? Not all of the RWA coin projects are going to hit their headlines in terms of relevance, value proposition, TVL, and amounts of news and announcements, which is all the more reason why I create these vetted stories, if you like, in these midweek specials and Friday desk reviews, which is what I would suggest you tap into just to find out what is actually emerging out there in mainstream. It just comes to show that tokenizing the money markets as well, in addition to tokenizing the rest of the financial instruments, whether we're talking about equities and stocks, tokenizing treasuries, so bringing the government bonds on chain, even tokenizing private credit, as well as other financial instruments and non-financial instruments. Remember, tokenization appeals to all physical analog assets on the blockchain, particularly those that have that monetary or economic value attached. So that's why it's so important to distinguish when you're investing in these real world asset coin projects, it must have that monetary value attached, because without it, it just becomes a wasted investment, right? So that's really just a word of caution there. Right, the next one, how we are seeing the surgence of tokenized gold, because there is a demand of this type of precious metal to be tokenized on the blockchain. So Tether Gold now exceeds $2 billion in tokenized gold as investors flee fiat volatility and inflation. Now, the relevance of this article, we all know what gold is in terms of its original physical analog gold bars, if you like, that are deposited in the vaults of central banks, governments, and other centralized institutions. So it makes gold programmable collateral for DeFi and institutions. It helps expand liquidity on Ethereum, which boosts accessibility for tokenized commodities and precious metals. It bridges the safe haven asset with DeFi, validating gold as a real-world asset alongside treasuries now and private credit. It confirms that tokenization isn't limited to financial instruments alone. It's spreading into commodities and stores of value. So again, I've touched on the topic of how we are starting to see precious metals now becoming tokenized on chain, particularly the king of physical commodity, which is gold, not to be confused with digital, which for me is ultimately Bitcoin. Now, a word of caution is interesting concept, but if you're thinking about how to best retain and even build your wealth in the long run, I wouldn't necessarily opt for even tokenizing gold or even the gold underlying itself, because why? It used to be a perfect money in that it was very difficult to mine gold, but since we are seeing increases amount of technologies out there and a lot of companies that are able to extract the pieces of gold underneath the earth much more easily than with Bitcoin. Remember, Bitcoin has that finite cap and scarcity, which gold doesn't, right? There's only ever going to be 21 million units of Bitcoin out in circulation. We're almost 20 million that's been mined, so we've got 1 million left. But nevertheless, with gold, it's still an infinite amount of supply. So there isn't that hard cap limit with gold. And also, there's so many defects around gold. This is a growing trend, tokenizing precious metals now on the blockchain. But I wouldn't use it as a store of value in the long term. For me, ultimately, that would be Bitcoin. But nonetheless, is an interesting breakthrough for yet another use case being tokenized on chain. This leads to my last segue around the huge amount of crypto liquidation that we've seen so far this week. According to this article, it says that there's over $1 billion, but I've looked into a chart. It's more than that. It's $3.5 billion in leveraged crypto positions that's been liquidated this week, including Bitcoin, Ethereum, Solana, where we've seen prices falling as low as 5 to 10%, with 1.65 billion has been liquidated in the last 24 hours. So trying to help investors not to scaremonger, I just bring the facts and why I think ultimately we should use this as a lesson learned to not fall into the trap of adding yet more crypto liquidations than what we've seen so far. So we should just treat this as noise, as a cleansing event, not a collapse. It helps flush leverage and restores structural support for the long-term positions that we currently have in these crypto assets, including Bitcoin. So for me, ultimately, the thesis around Bitcoin fundamentals still are intact. We've seen increasing amount of new ETF inflows, increased amount of hash rates, and even sovereign accumulation still remains strong. With RWA adoption accelerating, this correction might be the reset before new capital rotation to Bitcoin and tokenized yield products. This is why I always explain and suggest and recommend to digital asset investors to always remain cool, calm, and collected, and to try and make yourself more immune. Cut yourself off from the noise that we may be seeing out there. No matter the hysteria, no matter the black swan events, because this is another black swan event. They call it now flash crash, which is just momentary, but we're starting to see, in fact, the prices of these crypto assets rebounding, which is very short-lived, right? And to always stay clear around leveraging, i.e. actually resorting to borrowing capital whenever you make these crypto investments. Always stick to your own long-term thesis and conviction. And if you can, and you have spare cash floating around, well, this is a very good opportunity as we're starting to see these small dips in price to add to those positions in a gradual manner. In my case, I've added to my existing Bitcoin holdings as a result of this momentary dip in price. So really, as an upshot, particularly on the macro, despite this week's crypto liquidations, over $3.5 billion across major assets, it may rattle, as I said before, the short-term sentiment, but they don't disrupt the structural momentum behind Bitcoin and real assets. The train hasn't stopped. It's just clearing the tracks. That's all I have for you for today. If you value clarity on Bitcoin, blockchain technology, and real assets tokenization, stay alert. Subscribe and enable all notifications to stay ahead of the curve. Share this episode with those who need to understand what's coming, friends, family, and colleagues. This channel aims to deliver insight, no noise, and no hype. Subscribe now.